Next question. Consider following information. Sales is given an amount of rupees 1 lakh. Profit volume ratio is given as 60%. Annual fixed cost is 30,000. 10% debentures of 2 lakhs. Income tax rate is only 40%. There are 10,000 number of equity shares. You are required to calculate EPS, operating leverage, financial leverage, combined leverage. If the sales are increasing by 5%, calculation of the revised EBIT. Sales increasing by 5%, calculation of the revised EBT and EPS. Company wants to keep minimum EBT of 7,500, maximum affordable reduction in the sales and value of sales. Company wants to increase the EPS to rupee 1, required increase in the sales and value of sales. So these are the questions. So the first question is the simple EPS calculation. Then say the 3 leverages, and based on that say a few questions are required to be answered. Try to do one by one all the questions on your own, and then I will be doing answer for you. All the questions you have to do it on your own. So let us start with the answer. Answer of the question number 1. In that calculation of EPS, in the breakdown, working note number 1, calculation of variable cost to sales ratio. A small working note. In that case it is 100 minus profit volume ratio. So it is 100 minus 60, that is 40%. That is the first working about the profit volume ratio. Next is calculation of earning per share. That is answer of the first question, of course. Column number 1 is particulars. Column number 2 is answer. Sales of the company is 1 lakh. Less variable cost. It is 40% of the revenue. That is 40,000. Difference of both of them is contribution 60,000. Less fixed cost. It is an amount of 30,000. Earning before interest and taxes. It is 30,000. Less interest. %10 debentures of 2 lakhs. That comes to 20,000. Earning before taxes 10,000. Income tax rate is 40%. So earning after taxes is 60%, 6,000. 10,000 into 1 minus 0.4. Number of equity shares are 10,000. And earning per share is 60 paise. That is 6,000 divided by 10,000. That is the way the EPS is 60 paise. I request all of you to write down answer for EPS. So now the answer of the second question, in which we have to find DOL. It is contribution upon EBIT. The amount of the contribution is 60,000, EBIT is 30,000. So the answer is 2. Question number 3, DFL. It is EBIT upon EBT. So it is 30,000 divided by 10,000. So the answer is 3. Fourth question, DCL. DOL into DFL. So 2 into 3. Because there is no preference dividend, so DFL formula is simple to be applied. So the answer is 6. Next. Question number 5 to question number 8. For that, I am preparing a table. So column number 1 will be particulars. Then question number 5 answer, question number 6 answer, question number 7 answer, question number 8 answer. I am starting one by one. Sales of the company are increasing by 5%. Sales is right now 1 lakh plus 5%, 1,05,000. Profit volume ratio is 60%. So the variable cost is 40%. 40%, 40,000. So this 40,000 will also increase by 5%. So it is 42,000. Difference of both of them is contribution 63,000. Amount of the fixed cost is 30,000. So EBIT 33,000. Amount of interest. Interest amount is 20,000. EBIT minus interest is EBT. That is 13,000. Income tax rate is 40%. So earning after taxes is 60%. That comes to 7,800. No preference dividend divided by number of equity shares 10,000. And EPS will be 0.78. So question number 5 is sales of the company increasing by 5%. Calculate the revised EBIT. So this is the answer of the question number 5. Question number 6 says that the sales of the company are increasing by 5%. Calculate the revised EBT and EPS. So this is the answer of the question number 6. And this is again the answer of question number 6. So this is 5th question answer. This is 6th question answer. And this is again 6th question answer. So 5 and 6 we are doing it combined. 5 and 6. Then 7 onwards we are required to do once again answer. Question number 7. Next question. If the company wants to keep minimum EBT 7,500, calculate maximum affordable decrease in the sales and value of sales at that time. So this is required to be found. Amount of interest is 20,000. Amount of EBIT is 27,500. It is 7,500 plus 20,000. Fixed cost no change, 30,000. So again contribution is found as balancing figure. Amount of contribution is 57,500. That is 27,500 plus 30,000. Profit volume ratio is 60%. So sales value will be 57,500 divided by 0.6. So 57500 divided by 0.6. So it is 95,833.33. Minus 57,500. So it is 38,333. That is 95,833 into 0.40. Like that we understand. So for 7 question we can write the final answer like this. In order to keep minimum EBT of rupees 7,500, comma, sales should not fall below 95,833. Full stop. It should not fall by more than rupees 4167. 1 lakh minus 95,833. This is the answer. Question number 8. If company wants to increase EPS to rupee 1, calculate the required increase in the sales and sales value at that time. So basically we understand we want to have EPS of rupee 1. Number of equity shares are 10,000. So earning after taxes should be 10,000. So that is found as balancing figure like this. 1 into 10,000. Income tax rate is only 40%. So earning before taxes is 10,000 divided by 1 minus 0.4. So 10,000 divided by 0.6. That comes to 16,667. Amount of interest is again 20,000. Operating income will be 36,667. That is 16,667 plus 20,000. There is no change in the fixed cost, 30,000. So amount of contribution will be found as balancing figure. So again backward working. To make the calculation of the contribution, that is 66,667. Sales value will be 66,667 divided by 1 minus 0.4, 1,11,112, 44,445, 1,11,112 into 0.4. So the sales should increase to this value for increasing EPS to rupee 1. So answer of question number 8. In order to increase EPS to rupee 1, comma, sales should increase by 11,112, comma, it should increase to 1,11,112. Like that we understand. So let us have a revision of the entire answer. In the first part of the question, EPS is required to be found. For that, say we have computed variable cost to sales ratio. It is 40%. Then we have to find earning per share. Simple, we have to prepare a table to make the calculation of the EPS. That comes to 60 paise. Then there are 3 leverages that we have to find: DOL, DFL, DCL. Then question number 5 to question number 8. In that 5 and 6 can be done in a single table. For 7 and 8 we have done the entire working, and accordingly we have written one line answer.